Hello, this is Davide Biocchi speaking, and here we go for this weekly intermarket analysis. Let's start with the euro dollar as usual, and as we can see, we are very close to the price of 1.04. We have also been to 1.037, more or less the same minimum that we have seen at the end of 2016, beginning of 17, and more or less this is the last supper that we have to the road toward the price of 1 1. So euro and dollar at the same level. So this could be a reality, especially because of the policies applied by the Fed that already increased the interest rates, is in the process to dismiss some assets. And on the other side, we have the ECB still in the process of easing, because we already suspended in Europe the situation connected to the pandemic purchasing program, but we already have a quantitative easing that worked underground that is still in process. The ECB many times told us about the possibility that they will stop it, they will increase the interest rates, and they will also dismiss some let's say some assets, but this is still in words. So in fact, this is different. The Fed is already active. The ECB, central bank, European Central Bank, is for the moment still spending words on it. The difference is because in US, number one, the Federal Reserve is more aggressive. This is historically. Second, that the situation is more by far really better about the economic situation. You have a quite good situation with the salary, you have a quite good situation with the unemployment, and you don't have, let's say, a situation connected to the war, Russia against Ukraine, that we have in Europe. We have so many problems with the sanctions that were applied and that are now working also against us. So this is a quite terrible situation. The economy never recovered as it happened in the US after the pandemic. And also, let's say, the situation is more complicated here. So the ECB is really working on a very small path. And this is the difference. And we see all these things in the euro dollar. And we see all these things. So the fact that the dollar is really strong, especially in the dollar index. So if we look at the dollar index, we can see right now that it is at 104.6, so above the line of 103.7, 103.7, that was the resistance that worked a lot starting from 2014 until now. So we now are above that level, and we are back to prices on this dollar index that we were unable to see since 2003. So we have to go back 19 years to see something similar. So that is telling us about this story, really important. The impact of this is on the bonds. We now can see that the bonds are rebounding, so the yield is going down. When the yield reached the level of 3.2%, it was the bonds were bought aggressively. So what happened was that the yield from 3.2 went down to 2.8 the last week, and right now is back to 2.9 around this level. So what is going to happen here? Well, we know that 3.2 is a level that the market is unable to go above since 2018. So there were any attempt, but they were all rejected. What is going to happen right now is that probably, if the market will reach again that kind of yield, we can see again an aggressive buying of bonds. And with which money? Money that are flowing out from stocks. So that's why we are explaining US, especially US stock indices, are in a quite important suffering period. And it will continue if the story will work like this. So let's have a look not only at bonds, but at other securities that are impacted by a very strong dollar. The first one is the crude oil. The crude oil is at the level of, very close to the level of 110. So more or less the let's say, sideways area that we assumed as probable is a reality. So we are right now in that $20, 95 to 115, and more or less the market is moving up and down this level. So this is quite important. If the market will go above a price of 110, next target will be 115. But let's say we can have also, less volatility in short term. So let's see if the market will be able to go above that one, or in the meanwhile will come back to 100 as it happened last week. That is a price, let's say, that create something like a fatal attraction for the crude oil. On the other side, we have the gold. So the gold has two functions. The first one is to be a safe haven. So when the market is scared by something, normally you buy gold. Okay, this is good. On the other side, the market is sold in dollars. So if dollar is very strong, maybe sometimes the price can go down a little. So this is something that works against. On the other side, gold is also an alternative for bonds, especially when the real yield is below zero. When I say real yield, I intend, let's say, the facial one less the inflation. And right now, when we were at 3.2%, if we compare it not with the punctual inflation, so the inflation of today, but the inflation expected in the next 10 years, well, we were in a situation in which for the first time since years, we have seen a real yield positive. That's why money went to buy the bonds, and let's say also the gold was impacted by that. So that's why we have now the gold back to a price that is even below the level of 1,800. And I think we can assume a very important level such as 1,765 is as a quite important target. And for sure, the level of 1,680, that is more or less the minimum, so the bottom, that we have never seen one tick below during the after the pandemic. We have a possibility that it can be reached and touched. Okay, so let's see what is going to happen, remembering that on the other side we have something like a double top in this area of 2080 that was hit both in the 2020 and recently when the war began. So this is exactly what happened, especially on these commodities. But let's start analyzing also the stock indices. So European indices are more resilient to, let's say, this downtrend that we have seen recently, especially because of the inaction, so no action from the central bank. And that's why we can easily explain why they are, let's say, doing that. For sure, it remains the story of the level of 4,000 and also the level of 3,900 as a main target, but we can also highlight that we are now clearly under a downtrend line. So let's say that the violation of this downtrend line can work as, let's say, as a trigger for a reversal pattern. Let's see if it is going to happen. The same situation we have on the Euro Stock 50, we can see on the DAX index itself. So very similar situation. The key level here is 14,800 that we can clearly see here. But also here is possible to see this downtrend line that is really working hard. So any price above this level will, let's say, tell us about the possibility to do another attempt to go above the price of 14,800. That is, let's say, a separation. This is a watershed between a period in which the European situation is really bad into a period that can be really more smiling to the stock indices. But this is far to be reality for the moment. Let's see what is happening in US, and the situation here is that we have a weaker index. So let's say that we have the minimum of the war and the last one was above. let's see what is happening in US. We have a minimum at the beginning of the war that was here, and the present one is by far below. So this is why I'm telling you that the US indices are more weak, and this is because of the, let's say, very aggressive policy applied by the Federal Reserve. So we have two key levels here. The first one is 4,000. 4,000 is not a support, but it's a rounded price, very important, because it's a psychological, very important level. Despite that, the real ex-support, now resistance, is 4,100. So let's see if the market will have any choice to go above that level. Any attempt will be strongly fighting. So let's see what is going to happen. Very similar is the situation that we have on the Nasdaq, that is weaker than the S&P 500. Especially we have a lot of growth stocks. So all that stocks that are connected to the potential growth in the future, that were the one more sold recently by the market. 13,000 here is the key rounded price level, and it's also the support. So we have the same story here, and we are quite far from that. So let's see if the market will be able to arrive there, even if here we have another level in between that is 13,300 that can work as a resistance. The last one I will share with you is the Russell, and on the Russell what we can say is that after several times in which we, let's say, discussed it simply about sideways, so we had a sideways of 250 points that went on for the entire 2021. We were in a sideways of 200 points, 1,900 to 2,100 for the first part of this 2022, but then right now we are now below here. So even here, as in Europe, we can trace, we can draw a downtrend line, and let's say we can expect the market maybe to do an attempt. Could be that one day we will face the possibility that going back again above 1,900 could mean not only, let's say, going above a resistance, but also above a downtrend line. So it will be really relevant in the short term, but let's see if it will be reality too. So let's say this is all for today. Thank you very much for being here. This is Davide Biocchi from Italy. Ciao, ciao. Bye-bye.